Have you ever wondered when you started learning how to trade and then someone was teaching you about Fibonacci levels? And they tell you this Fibonacci levels is a series of numbers that can act as support and resistance, but no one ever tells you the exact Fib level you should use. And the most ridiculous thing they say is, let's say, for example, we have Uh, let's use this swing as an example. This is the swing we're going to be using. This is on a live market anyway. All right, so you have these, and then they tell you that, oh, this is 1.8. The open 618 is the support level. Just put your order there, and then maybe depending on the buy or long, you put your stop loss above or below. Such a ridiculous and stupid way of using the fib level. It's never made sense to me. Why am I going to be gambling on a venture that is already similar to gambling in a little bit? So then I got to know about this thing in the smart money industry on forex trading called change of character, CHoCH for short. And then also that too, it seems in the Forex YouTube community, everyone wants to complicate issues. Nobody wants to simplify things. And I saw no one willing to explain that. It was just called CHoCH, change of character, and it was so complex. The most unhelpful lot of them is this ICT guys, which I'm aware that he has a lot of fan base. But anytime I watch his videos, it's just complex, just too hard for something that is easy. So then, luckily for me, I was reading a book, and the book mentioned the 88.6 fib level, and that changed everything for me. And that was what I've been able to incorporate into my own knowledge of what a change of character is. And this is going to help you a lot. So first of all, let me use a new chart for this. This is going to blow your mind. So let's use EURCAD because I'm focusing on EURCAD today. I want to use a new chart. Now, you must have heard of liquidity. And also, it seems nobody knows what liquidity is, but everybody just saying it. Like, no one has been able to give an exact example, but it's as if they are just like, yeah, liquidity. But this is how I've seen liquidity in the market. Liquidity is just where there is a high amount of activity on the chart. There's a high amount of money that changed hands. Okay, so for example, on the EURCAD chart, we are bearish on the 15 minutes, and that is, I can go into that will be another video how I'm able to know that we are bearish, but we are bearish on the 15 minutes level, on the 15 minutes time frame. And this is the operating swing right now. This swing right here is the last place of liquidity. This exact swing right here, you could see that there was a lot of activity that happened. Okay, there was a lot of activity that happened on that point. So this means at the exact time of the market in this pair, there was a lot of selling activity that happened there. Now, what I observed that they do is they call something order block, which to me does not also make sense, but I think it's a visual aid and a psychological prop for people who trade in this smart money stuff. But I don't use the perception or the psychological prop of an order block. This is what I do. This is how I trade. So I take each swing. For example, this is a swing. This is what I know is from this point. Let me put a sign there. So from this point to this point right here, I see that a lot of activity happened. So a retracement is more likely to happen in any of those points, in uh, any region in this area. So the old teacher will tell you to target a fib level, but this is what I've seen worked for me. What I target is the 88.6 to the 1 fib level, and I put a rectangle portion around there, so it will like this. And I have observed on Instagram, on every of these guys trading smart money concept, liquidity concepts, look at the exact point where they put their rectangles. It's always on the 8.6 fib level of a particular swing. I don't think they are aware of that. But most of the times, and I get the reason, but most of the times the market tends to change at the 88.6 fib level of a particular swing. On the 5 minutes time frame, on the 1 minute time frame, it happens. And I know why. And let me just explain that for a little bit. So if you have what people call the order block, for example, is maybe something like this. They see a very small candle, and then decide it is going to be a very huge candle downwards, and then they will put something a rectangular shape around here and say that is where the liquidity is. Now if you check those places, it's often it is the 88.6 fib level of that particular swing. So I don't trouble myself with the complexities of all this. I look for a swing and I target the 88.6 fib level of that particular swing. And this is what I've put the rectangular shape on. I don't like calling it rectangular shape, but I don't have any better stuff on that shape on. So I've put it there. Now, what's the next thing to do? The next thing to do is I'm going to be waiting for the price to get there, and I'll be looking out for a change of character on the 1 minute or 5 minutes time frame. So what is this change of character? Now, this is the swing that we are talking about, right? So let's go to the 1 minute time frame, which is the very, very, very ugly time frame. So on the 1 minute time frame, what you are going to have is a series of higher highs, higher lows. In this case, we are aiming for a sell. So you're going to have a series of higher highs, higher lows. If you are aiming for a buy, you're going to have the progression of the price into the selling zone, which I marked with the character, well, with the rectangle. It's going to be, if it's a selling, it's going to be a higher highs, higher lows. For example, it's going to be like this. The market is going like this: a high, a low, a high, a low, a high, a low. All right? And this is because we are on the, let me go back to the 15 minutes time frame. So in this chart, in this little price movement that happened from here to this point, on the 1 minute time frame, it's a series of higher highs, higher lows, not exactly neat. So this is what a change of character happens. This is what a change of character does. This is what they do. Now, on the 15 minutes time frame, when the price enters this zone, immediately they will go to a 1 minute time frame. And this is what you do. So when the price enters a zone, this could be on a buy or a sell. When the price on the 15 minutes enter this zone, this particular zone that you want, what you do is you go to the 1 minute time frame. And what are you looking for in the 1 minute time frame? Let me straight this. You are looking for a change of character. So what is a change of character? If you are buying, if you are trying to sell, A change of character is when the price goes below the last low. God, that is so mouthful. Let me give an example. So you're going this way, higher high, higher low, higher high, higher low, higher high, higher low, and then we burst into this zone, right? A change of character does not happen unless this here, this last low right here is taken out. Then it gets taken out. So what do you do? Where do you put your sell order? It's going to be on the 88.6 fib level of this swing right here. So it goes like this. So we've broken this. That is why you see most of them we put something here and say, oh, there's a break of structure. Very funny name. A break of structure is happened here. And then you put what I do is I take a 88.6 fib level of this swing that broke this structure, and then I put it around here. My stop loss will be above, and then hopefully it gets to this particular 88.6 fib level, and then it comes down. That is a change of character. So in this case, for example, what am I expecting in EURCAD? What am I expecting in EURCAD? This is a live trade right now. What am I expecting in EURCAD? I'm expecting the price to, on the 15 minutes time frame, a 15 minutes candle, to come here like this, to go here like this, and then it hits this zone. They call it I don't know, I've forgotten the name of the column, maybe the selling zone, but for me it's the 88.6 zone. Then it gets into that zone, and on the 1 minute time frame, from the candle that enters this zone, I'll be expecting something like this. I'll be expecting let me take this out. Let me go to the 1 minute time frame. I hate the 1 minute time frame as an example because sometimes it's very, very clumsy. But I'm gonna do an update to see to show you guys. Let me go to the 3 minutes. The 3 minutes is neater. All right, so we are here. Yeah. All right, so this was gonna happen. These higher high, higher low, higher high, higher low, and then we go into this zone. Now, am I going to sell? No, I'm not going to sell immediately. Now, you can sell here if you're an aggressive trader, but your stop loss will be like maybe 20 pips to 10 pips. So what I do is I will wait for this low right here to be taken out, and then when it gets taken out, then I wait for it to get back to this place, and then hopefully it sells back. This is a change of character. A change of character is only triggered when your price enters your selling zone. Now, what are the drawdowns, the drawbacks for this? Sometimes the price may not get there. The price may not enter this zone. The price may not enter the zone. If it doesn't, you don't do anything. You don't do nothing. It's a very strict marketing strategy. That is discipline. If the price is from my experience, all that happens here in this for this place, and this could be protracted, it could be very, very long. All that happens here is just a trap, because you may take a trade here and you will go sideways as much as the market loves. But once the market enters this zone, from all my experience I've seen, once the market enters this zone, there is always a quick interaction between the buyers and the sellers. So sometimes what you have is the market enters this zone and no change of character will happen, and then it just goes out and then it breaks through. Then when it breaks through, we recalibrate our we recalibrate our strategy. Right. I went to attend to an emergency. I can't remember what I was saying anymore. But what's happening here? Well, let me give the chart a little bit to calm down. So a chalk is very, very important in uh, getting the best levels to buy and sell. The purpose of the chalk, outside the complications of the terminologies, is that it gives you a very small it gives you a trade with a small stop loss, and the stop loss is always essential in the sense that the stop loss will tell you if your stop loss gets taken out, most of the time is because there is now a fundamental shift in the structure of the market. So that's the purpose of a chalk. Aha, right, this is what we have now. This is what this this is what is happening right now. So I went for like 20 minutes before this happened. So what I'm looking for is for this to happen. So I'm looking for an entrance into this zone, since my bias is for selling, into this zone, a higher high, a higher low, and then I want the low to be taken out. When it's taken out, then I want to enter around here. So let's watch out. I'm going to give an update video to how this is going to pan out. I should add that you can, if you are an aggressive trader, what I do sometimes is I may just take the 88.6 fib level immediately. I will take it. That means my trade will be somewhere here on here. But the thing is that the stop loss is, let's say, let's say 13 pips. Right now, from the liquidity that is happening right now, it's very possible that EURCAD becomes bullish again. So fingers crossed, let's observe.